If you've been trading for some time, you've seen the liquidity sweep, the grab, the stop hunt, the fake out, whatever you call it, it is everywhere. The raid above the high or below the low. The move that takes everyone out right before it reverses. TradingView's script library has filled up with indicators promising to catch it for you. So we pulled 5 that are trending right now and read the actual code behind each one. No hype, just what the code does and whether it earns a place on your chart. Nadaraya-Watson Regression Liquidity Sweeps, created by Algo Alpha, sits in a lower pane and is built on a kernel regression of price. A Nadaraya-Watson curve smooths the close using a Gaussian weighting that leans heaviest on the most recent bars, and the slope of that curve, normalized and smoothed, becomes the oscillator that drives everything on the chart. When the oscillator is positive and rolls under its signal line, the tool marks an upper liquidity level at the high of that bullish phase. When it is negative and crosses back up, it marks a lower level at the phase low. On the chart, you also get a Nadaraya-Watson volatility band, drawn as candles, oscillator-based bar coloring, rebound arrows when price reclaims the curve, and small dots flagging weakening momentum. This one is a context and confirmation layer, not a system you can hand your risk to. There is no stop, no target, no trade tracking anywhere in it, so it only earns its place stacked on top of your own entry method. The honest issue is the gap between the name and the logic. What it labels a liquidity sweep is really a momentum extreme that later gets closed through. There is no wick raid and rejection, no resting pool being raided and reclaimed, just a level being broken. It also holds only one active level at a time, rather than mapping a field of resting liquidity. And on the live bar, the oscillator crosses can flash before the bar closes, so signals are best read on confirmation. The engine is genuinely well built and one of the better looking tools in this group, and it deserves credit for using the regression method that does not repaint. The deduction is for the branding. The sweep story is mostly cosmetic over what is fundamentally a momentum oscillator, and with no risk framework, you are doing the heavier half of the work yourself. Mirage Liquidity Sweep Pro, created by Willy AlgoTrader, is a liquidity sweep detection system built around the classic stop hunt pattern, wrapped in a full trade management layer. It tracks major swing highs and lows, treats the unswept ones as resting buy-side and sell-side liquidity, and watches for price to raid those levels and reverse. A sweep registers when price wicks beyond a stored swing, but closes back on the original side. The wick takes the liquidity, the close rejects it. Every qualifying sweep is graded 0 to 100, with the wick depth carrying the most weight at 30%, followed by how far price reclaimed past the level, where the bar closed in its range, a volume spike component, and a soft higher time frame bias. Only sweeps clearing your minimum score qualify. By default, the indicator then waits for confirmation. The sweep becomes a setup, and the actual signal only fires once price breaks recent minor structure, a change of character, within a set window. On entry, it builds a complete trade, a wick-based stop with an ATR buffer, 3 take profits stacked at multiples of risk, break even after the first target, and a projected liquidity objective drawn to the nearest opposite pool. Given the depth of that risk and confirmation logic, this is built to run as a standalone system rather than a confirmation overlay. Bolting it onto another setup would mostly leave its trade management sitting idle. The main thing to understand is the win rate on the dashboard. A trade is logged as a win the moment price touches the first target, even if it later trails back to break even, so that number measures how often price reached 1 times risk, not how often the trade actually paid. Mirage is a structurally complete sweep system with genuine confirmation logic and risk handling that shows real thought. The trade-off is responsiveness, and the dashboard stats read more flattering than the realized result behind them. Instead of guessing where a liquidity sweep will hit, Quantum STS pre-draws pre-calculated, back-tested positions. You place the orders and walk away while the statistics do the rest. Built on calculation rather than fixed signals tied to rigid parameters. It is a session-based trading tool and the newest addition to our Pro Suite. Link in the description. HPDHPDL zones, created by Project Syndicate, maps the previous day's high and low as zones rather than single lines, and adds a previous day golden pocket, the 0.5 to 0.618 Fibonacci band, measured across yesterday's range. These are among the most watched levels in day trading for a simple reason. Resting stops pile up just above the prior high and just below the prior low, which makes them genuine liquidity pools rather than arbitrary lines. What lifts this above a basic level script is the strength engine. Each high and low gets a 0 to 10 score built from 5 weighted inputs: prior day volume, range size versus the average daily range, how decisively the prior day rejected its extreme, distance from the nearest round number, and isolation from other recent levels. This is strictly a context layer. There are no entries, no stops, and no trade tracking anywhere in the code. It earns its place stacked beneath your own execution method, marking where the meaningful levels are while you decide how to trade them. The honest limitation is originality. At its core, this is the previous day, high and low, a concept any trader can draw with 2 horizontal lines, and the value here is the prioritization rather than the idea. The golden pocket is also always measured low to high, regardless of whether the day closed up or down, and the strength weights, while the author says they were checked against data, are baked in, rather than something you can see or verify yourself. The scoring logic is genuinely thoughtful and grounded in how these levels actually behave, and as a clean read on daily liquidity, it does its job well. It just rides on top of one of the oldest level concepts there is, so what you are paying for is the filtering, not the levels themselves. Liquidity shift detection, created by Zierman, strips the idea down to its essentials: a sweep followed by a shift, with none of the trade management scaffolding the others carry. It marks the moment liquidity is taken, and then structure changes hands and leaves the trading decision entirely to you. It tracks swing highs and lows, and a setup begins when price trades through one of those swings, but closes back on the original side, the classic raid and reclaim. That alone is only a pending state. The sweep on its own means nothing. The tool then waits for confirmation, and confirmation comes in one of 2 forms. Either price closes through the opposing structure, an actual break, or a displacement candle prints, a body large enough relative to ATR to signal real intent rather than drift. Only when one of those lands does the level get stamped as a confirmed liquidity shift, with a line, a label, and an arrow on the confirmation bar. A gray sweep zone marks the area that was raided. On the display question that matters most for this kind of tool, it gives you a choice. In confirmed mode, it draws nothing until the shift is locked in, so the marker never moves once printed. In live mode, it shows the setup developing in real time, which updates as the bar forms and will redraw before close, so live mode is best treated as a heads up rather than a finished signal. This is a context tool by design and makes no pretense otherwise. There are no entries, stops, or targets anywhere in it, so it sits underneath your own execution as a structural read on when a sweep has actually flipped the market rather than just poked a level. The honest limitation is what comes with that minimalism. You get the shift and nothing after it, no sense of how far the move might run, no objective, and no record of how often these confirmations hold, so the validation work falls entirely on you. This is the most disciplined tool in the group. The sweep plus confirmation logic is sound. The no repaint default is the right call, and it refuses to dress a context signal up as a system. The flip side is scope. It does one thing, and everything that turns that read into a trade is left to you. Strong reversal signals, created by Project Syndicate, is a liquidity sweep reversal system. It hunts for a level being rated and rejected, then fires a counter move once that move runs out of steam. It can pull its liquidity levels from 3 places: major swing pivots, the previous higher time frame bar high and low, or the high and low of the Asian, London, and New York sessions, so you can point it at whichever pool you actually trade around. A setup begins when price closes beyond one of those levels, but leaves a rejection wick of at least 20% of the bar behind it. The raid and the rejection in a single candle. From there, the tool tracks the extreme and waits. The signal only prints once a bar fails to push the sweep further, and that bar has closed, which keeps it from firing into the middle of the grab. Every signal is graded 0 to 10 from 5 weighted factors: trend context against the 50 and 200 EMAs, the size of the rejection wick, whether volatility is calm rather than expanding, proximity to the longer-term mean, and how deep the sweep ran. Setups roll into 1 to 4 star tiers, and the dashboard is the strongest part of the whole tool. It tracks win rate, expectancy, and R, and a win rate broken out by star tier so you can see whether the higher grades actually earned their keep. With entries, stops, targets, and full result tracking baked in, this is built to run as a standalone reversal system. The thing to check before trusting that win rate is the target geometry. Out of the box, the stop sits wider than both profit targets. The first lands around a third of the risk, and the second around 7/10, so the reward to risk is below 1 to 1 on every trade. A high win rate is therefore doing all the work, and a trade is logged as a win the moment the first target is touched, even if it later trails back to the stop. It is also a counter-trend tool by design, and fading moves is inherently lower odds than following them. This is the most complete liquidity tool in the group, with 3 source modes, a real sweep and rejection requirement, and the most honest dashboard of the bunch since it shows expectancy rather than only a flattering win percentage. The ceiling is that default target structure. With both targets inside 1 to 1, you either retune them or accept that the whole strategy lives and dies on a very high hit rate. In our last video, we reviewed the auto chart pattern indicator every trader needs to know about. If you missed it, you can watch it right here.